I mean, Indonesia, as it's been a big week, finally we are at the end of the electoral process. What we are looking for is really two key things. One is now the formation of a strong cabinet full of technocrats and professionals. And secondly, what does the government do with respect to its fuel price subsidy reform? From a sector perspective, we like Indonesia on a mid to long term basis. And we continue to focus on three main areas. One is consumer, the banks, as well as infrastructure. So those companies, where we still see consumption growth intact because of rising incomes, banks operating in very niche areas, as well as companies which could be a direct beneficiary of any reforms from Jokowi's side. Yeah, I mean, India and Indonesia are comparable today. They're both beneficiaries of this, of oil prices falling down. They've had a new leadership in place. They're both domestic consumption-oriented economy. So even when it comes to India, there are two legs to this story. One is definitely stocks which are a play on consumption. And then secondly, stocks which are a play on reform. So some of the infrastructure names in the engineering and construction side, private sector banks. We are positive selectively on some of the IT services names and selectively on pharmaceuticals. And we're very conscious about valuations. So I think it's more of a stock picking strategy that we are adopting here. I mean, when you look at China today, it's really playing a balance between growth, the quality of growth and reform. And what we feel enthused about is that authorities are pursuing quality over quantity. And especially when you look at this low growth world that we are living in, a Chinese GDP number of, say, 7.1, 7.2% is really not that bad, as long as the quality is right? So we do feel that, investors are well aware here on the ground in Asia when it comes to Chinese growth moderating, but then we are looking at, again, reform, new announcements on reform, and that would be the stimulus for China.